Welcome. I'm Joan Youngman, a senior fellow here at the Lincoln Institute, and we're delighted to have you with us today to hear an outstanding scholar, a very creative thinker, and a great friend of the Lincoln Institute, Professor Steven Sheffrin of Tulane University. Steve's a public finance economist, and we at Lincoln have learned from him about everything from the impact of assessment limits in California to perceptions of equity and fairness in taxation, which is the topic of today's talk. He's been a visiting professor in Singapore, at Oxford, at Princeton, at the London School of Economics. He worked in the Treasury's Office of Tax Policy Analysis. He's been on the board of the National Tax Association. And he's maintained his prolific scholarship in the face of very demanding administrative positions. At University of California, Davis, he was Dean of the Faculty of Social Sciences, and he was the founding director of its Center for State and Local Taxation. So he was in charge of a division with 200 full-time faculty, and he still made time to teach everything from big introductory survey courses to graduate level seminars, and received a Distinguished Teaching Award for that. At Tulane, he's the head of the Murphy Institute, which strives to help faculty and students understand economic, moral, and political problems. And at the same time, he considers everything from issues in international corporate taxation to inconsistencies between the securities law and the tax law and their treatment of Madoff investors and other victims of Ponzi schemes. He teaches macroeconomics, behavioral economics, and has time to co-author a best-selling introductory economics textbook. And he's very engaged in state and local tax issues. This month he wrote an op-ed opposing the governor's plan to abolish the Louisiana state income tax. And this month, the governor abandoned that effort. And we're not saying there's complete cause and effect there, but he's definitely involved in current issues. And he still has time for everything from playing very serious, or as the Davis official website said, tough tennis, to Mardi Gras activities and running with the bulls in New Orleans, which he can explain to you. So basically, Steve is just one of these incredibly smart people who's interested in everything. And he's made time today to share with us insights from his new book, which is published by Cambridge University Press, Tax Fairness and Folk Justice. So please join me in welcoming him back to Lincoln.
Well, thank you very much, Joan. It's always a pleasure to be back at the Lincoln Institute. I should clarify one, you're wondering about the running of the bulls. It's roller derby girls dressed up in bull uniforms, and they run at 8 o'clock in the morning in the summer of New Orleans around the French Quarter. Well, it's a pleasure to be here. This is I'll be talking today about the project I've been involved with, and actually the project got started when I did a paper for a Lincoln conference, and I was asked by Joan and the other organizer to think about why people don't like market value taxation for property tax. And as I thought about that, it led me into some psychology issues, and eventually this expanded into a full manuscript. And so the focus today is on people's everyday attitudes toward justice, what I call folk justice, and how that differs from what I'll call expert justice. So we can start off by talking about some puzzles that we experience. There's lots of puzzles with taxation, but some puzzles that we experience from time to time. First of all, Americans really do not like the estate and gift tax. We've recently increased the exemption, and yet this is a tax targeted to the very wealthy. So we limited that, but at the same time we expanded subsidies to low-wage workers through the Earned Income Tax Credit. So on the one hand, we don't want to do redistributive taxation, but on the other hand, we're very generous with respect to certain types of subsidies to the poor. You can't pick up a newspaper these days without having someone talk about how terrible inequality is in the U.S. But when you talk to people individually and you just read commentary, they routinely embrace the astronomical salaries paid to sports stars and entertainers. I'm not sure how this shows up. This is Michael Spitz swimming in a sea of dollar bills here. But when Derek Jeter renegotiated his contract recently, the attitude of the Yankees fans, well, he earned it, it's his money. That was the view that they took. But at the same time, you hear this people bemoaning the fact there's so much inequality in America. People hate the property tax, we know that, yet they only revolt against it during certain periods of economic change. Some groups of taxpayers are much more obedient in terms to the tax authorities than others, but even when they face the same tax regime, the same enforcement regime. And everybody, more or less everybody, at least thinks about chiseling on their taxes a little bit, but all of a sudden certain non-compliers, like Leona Helmsley, suddenly become social pariahs. So these are some of the puzzles that we think about. And my starting point for answering these puzzles, or addressing these puzzles, is that we really should distinguish two types of views on taxation. There's kind of the expert views of taxation, and they focus, and those are promoted by economists, philosophers, legal theorists. And the focus of those individuals is largely distributional. Who gets what? Who's getting what share of income? I call that everyday Rawlsianism. John Rawls is a very profound, had a very profound fact, a philosopher down the road at Harvard. His book about only designing social policies to raise the welfare of the least well-off in society really kind of is reflectively become, if you will, the expert view of what redistribution should be. I contrast that with everyday notions of what I call folk justice, or ordinary people's ideas of justice. And they differ in a couple different important ways. One, they have a psychological foundation, which I'll discuss in a minute or two. And second, the focus is not so much on who gets what, but it's on procedure and process. It's about whether people are being treated fairly or not. Now, if you think about how actual tax policies are formed, they're formed in a very political environment where public passions rage, where individuals, the representatives, all debate ideas about fairness. I think it's important to be sensitive to both these ideas, both the ideas of the experts who are trying to push tax policy in certain directions, but also the ideas of individuals, the so-called folk justice, and how they affect tax policy. So there's if you think about these two types of ideas about justice, the experts and ordinary people, there's a number of questions that arise. First of all, well, how should they interact? How should we reconcile the ideas of experts with ordinary people? One approach comes from Rawls and from a long tradition of philosophy, where the idea is the philosopher sees what the ordinary opinions are out there, tries to educate the public, if you will, and then reaches a situation where the public, if they saw things correctly, would understand the views of the experts, and with some back and forth, maybe some give and take. Rawls called that a reflective equilibrium, and we'll look about that a little bit later. The question is how deep and what exactly are the ideas of the public here? Another possibility, again from two Harvard professors down the road, Steve Chevelle and Louis Kaplow, they suggest that in general we should worry more about people's welfare and not about abstract ideas of fairness, because abstract ideas of fairness may conflict with policies that will improve welfare. But at the same time, if people care deeply about fairness, maybe we should incorporate that into our views as well. Another issue, an important issue, is well, what are the primary psychological foundations of folk justice? Are these ideas just transitory, or are they kind of deeply rooted in human nature and human psychology? And furthermore, do they have important explanatory power for different areas of taxation? And perhaps do they provide us with clues to how we could reform taxation and make everyone better off? So those are the questions that naturally emerge when you think about the difference between everyday justice of ordinary people and the experts. So I'm going to talk now about what I consider the 5 psychological foundations of folk justice. And each of these has its own well-established empirical basis. The first 3 I'll talk about are very well established in the psychology and economics literature. The last 2 are less well known, but I think are equally important and have some explanatory power as we go forward. The first idea that ordinary people hold is the notion of procedural justice. There's been a long body of literature, which originally started in law, which emphasizes that people really value fair process and fair procedure. So even someone who's lost a lawsuit, if they had a trial, they feel better about it. People who are fired and they do exit interviews, just the fact that they do exit interviews and let them hear their views actually makes a difference. People are more satisfied when they get a chance to participate in the process. So there's two aspects of procedural justice. One is the process itself perceived as fair, and are people treated respectively? And the second idea is, do you have an opportunity to express an opinion or express your voice in the process? And as I mentioned, there's a large body of empirical research shows that people will actually accept worse outcomes to them personally if they feel they've been treated fairly in the process. The second major idea, and this again goes back to the 1950s along with procedural justice, is this notion of equity and kind of social exchange theory. People strongly believe that there should be a relationship between the inputs they put into a process and the outputs they get out. So I'll give you an example. There's a famous psychology study where psychologists advertised for people to do some kind of some work which wasn't particularly meaningful. And there was a wage being specified. And so some people came in, they volunteered for it, and then it was like, say, $5 an hour. And some people were paid $5 an hour. Other people were told, well, we made a mistake. The work isn't really worth $5 an hour, but it's only worth $4 an hour, but since we advertise, we'll pay you the $5 an hour. And other people were told, well, sorry, it was only worth $4 an hour. We only can pay you $4 an hour. Now, you would expect that people who were paid less than advertised would not be very happy. But it turns out the people who were, in fact, told that the work was worth more, but we're going to pay you anyway because there's a mistake, actually weren't very happy either, because they didn't feel that their inputs were being measured corresponding with their outputs. And when that happens, when people, for example, feel that they're underpaid for a certain job or overpaid for a certain job, they'll typically adjust their behavior accordingly. If they feel they're overpaid for a certain job, they'll all of a sudden later say, well, the job was a lot harder than I thought it was going to be. It was a lot more complicated. And so they adjust their attitudes and so forth. So there's a very strong connection in everyday life between what we put in and what we get out. And that'll come back particularly with regard to talking about income and taxation. Most of you are familiar these days with some of the experiments where someone's giving, in a laboratory, someone's given like $10 and there's a competitor across the table and they're saying, well, you can keep the $10, you can give some of that $10 to the person across the table. Now, and you'll only see them once. Now, in that situation, the so-called rational economic individual would simply keep all the money themselves and not give any to anyone else. But in fact, people routinely give 20–30% of that $10 over to the other person. There's a notion of fairness, and they've actually done experiments with dogs and chimpanzees, where certain dogs and chimpanzees are treated unfairly, and they get very upset when they see in the laboratory. And so that's kind of a familiar, and it does suggest that people do have these altruistic feelings. Normal economics now has incorporated that into it. I call that perceptions of fairness, but there's also a notion of qualified perceptions of fairness. If you earn the $10 before you went into the laboratory by taking some test or doing some exercise, you're more likely to want to keep that $10 than give it to somebody else. So our sense of property rights also determines how much we are willing to be generous. So those are the three most common ideas. There's long literature on those in the psychology literature. There's two others, though, I think are important for some aspects of understanding taxation. There's a psychologist at the University of Illinois named Linda Sitka who came up with this notion of moral mandates. And there's a sense, and we all experience this, that you might be treated unfairly, but at some point, all of a sudden you feel this incredible moral outrage about something, or certain ideas that become much more important to you or important to other people than can rationally be explained. And you lash onto these, and these become kind of your moral basis. You feel outraged at a sense of violation, even if it's kind of a minor violation. So Leona Helmsley, who we talked about before, obviously got people very upset when she said only little people pay taxes. Stanley Tools was a company in Connecticut that did a tax inversion where they basically became wholly owned by their Cayman or Bahamian subsidiary to avoided U.S. taxes. That created a lot of outrage, particularly in Congress. And of course, the Bernie Madoff case, where where obviously a lot of people were hurt, but the outrage that was felt by people way beyond that scope. And so moral mandates, this notion that certain ideas can really trigger broad passions, is kind of important. And the last idea I'll mention is something called system justification theory. We all need to somehow justify our position in the social hierarchy. And so what happens is, even if you're low in the social hierarchy, you must feel that, well, there must be some reason for that. And since religion is not necessarily the answer for all people these days, they think there must be some systematic or social reason why this must occur. In other words, some people said we have a strong need to feel that we live in a just world, right? And this feeling is actually stronger in difficult times. As the more difficulties you experience, psychologists have shown the more likely you are to identify with the status quo. And so these are the kind of the 5 psychological foundations. And what I do in the book is sort of use these as a basis to kind of track out some of our attitudes towards taxation, to try to understand some of the puzzles and things which I always felt to be puzzling about our tax system. So let me now turn to kind of a few examples of these. I'll first talk about tax compliance, that is paying your taxes, and the psychology behind that. I'll talk a little bit about, since we're at the Lincoln Institute, procedural justice and market value taxation. I'll talk about the limits, our attitudes toward redistribution, which are actually quite conflicted, and how equity theory plays into that. I'll talk about workfare and the notion of stigma of people who don't work. I'll talk about the psychology of estate and gift taxation a bit, show you some experiments and some data along the way. And I'll conclude with a discussion of some normative issues about whether this notion of whether people deserve what they earn or not, which actually is a really interesting topic. So that's the plan, and we'll build on these kind of psychological foundations I've talked about to illustrate these. Now, I know you're not going to be convinced by all my examples, okay? I've convinced myself. I wrote the book, and by the time of rewriting and editing and rewriting again, I've convinced myself that all these make sense and they work perfectly, but I know not all of you will be convinced. But I do hope when we finish today that all of you will be convinced that at least one thing works pretty well, and that psychology is important for understanding taxation. And I'll be glad, of course, as we go later, to take any questions that you have. And I'm not claiming that the psychology explanations I'm going to give will explain everything or be the total explanation, but I do think they play an important role in understanding these phenomena. So let's start with taxpayer compliance. That is why people pay taxes. And you can think mostly of income taxes, but of course other taxes can come into the mix as well. And our standard expert theory in economics is the basically deterrence model. That the reason people pay taxes is because if they don't, they'll get caught and pay a penalty. And basically paying your taxes or evading is like taking a gamble. Now, people have studied this for a long time. It's a very natural thing for economists to look at, and it's become kind of the standard paradigm. But the economists have known that although it matters, obviously, when you know that there's 1099 information reporting, you're more likely to include that information on your tax return. So obviously deterrence matters quite a bit. And the places where there's least compliance on Schedule C with expenses and so forth, the business deductions, there's not much cross-checking. So we know it works, but it also has limited empirical applicability. It doesn't explain the volume of compliance. People would actually, given the penalties there and the audit rates, actually would probably typically comply less. And it also doesn't explain something called tax morale. Tax morale is this kind of the feeling that it's your duty to pay taxes and so forth. And there's been a lot of studies that show that in countries or areas or regions where tax morale is higher, there's a lot more voluntary compliance with the tax system, holding everything else equal. So public opinion has a number of aspects. Process matters, and I'll give you an example in a second about how the process of collecting taxes actually matters as much as the amount being collected. We also know, consistent with the moral mandates, that when people are outrageous in their non-compliance, like Leona Helmsley, or there's tax shelters at the corporate level, like Stanley Tools, that there's a lot going on. So expert opinion, again, focuses mostly on deterrence, but the public opinion is influenced a lot by these kind of issues of process and tax morale. So let me tell you a little story that's about the Kalgoorlie miners in Australia. Now, many of you have been to Australia, but if you've been to Australia, most of you have been to like Sydney and Brisbane and Melbourne and places like that on the east and southeast. Kalgoorlie is actually in Western Australia. And the reason Australia is so rich is there's all these mines out there. So in the 1980s and early 90s, they discovered all sorts of rare minerals out there. And these kind of miners who were just kind of ordinary working people all of a sudden came into a lot of wealth. They were being paid very well by the mining companies, and all of a sudden they accumulated money. And as they accumulated money, they ran into an interesting problem they hadn't confronted before, is that they started to owe a lot of income. They started to owe a bit of income tax. So around the late 80s and early 90s, throughout Australia, there were a lot of these promoters of what they call, which were of tax shelters, which are in Australia they call tax schemes. And for those of you who remember the 1980s, before 1986 Tax Act, when everyone was trying to sell you a tax shelter, the very same things were going on here. So they were selling these shelters where you invest in livestock or you invest in virgin forest somewhere else. And all the investments were characterized the same way. They had very rapid depreciation. They were very heavily debt financed, so you got interest deductions. And so your losses in the first couple of years, which gave you tax benefits, outweighed the fact that the investments themselves didn't pay off at all. And so by the early 1990s, these were proliferating, and many of these miners would seek, they got advice from third parties that this was an okay thing to do. There were no rulings. There were no rulings against it. All of a sudden, the Australian tax authorities decided that those were actually not legitimate tax shelters. And they had been studying this for 4 years. And finally, in '98, they issued the ruling. And then they immediately sent out letters to people just before Christmas saying that they owed penalties and interest on all the back taxes back at least 4 or 5 years, depending on what their statute of limitation was. The letters that were sent out were written in tax legalese, were incomprehensible, and the people who actually got the letters were interviewed by some sociologists, thought that they seemed to think the letters accused them of being tax cheats. And so what happened was there was this kind of massive tax protest that occurred. Over 43,000 taxpayers were affected, not just the miners, but people nearby. It actually created a crisis for the Australian tax system. So this went on for a couple of years, and finally, 4 years later, they reached a resolution where they got rid of all the penalties, they got rid of all the interest that had accumulated, and they let people pay back the original tax liability over an extended period, over a couple-year period. And so it was clear that what outraged people, and when the sociologists interviewed them, was the fact that it was the process. The tax authority kind of dithered in deciding whether it was legal or not. It wasn't so much that they eventually they realized that not every deduction was legitimate, and the government, they did owe the money back to the government, but they really were not. They really were perturbed by how they were being treated by the tax authorities. And that actually triggered a major change in the Australian tax authority approach. They brought in a number of psychologists and sociologists, and Australia became, for a while, like the U.S. did for a while, a much more kind of user-friendly regime with regard to paying income taxes. And so what mattered was the violation of a fair sense of process. There's other work in economics that supports this. Let me just highlight some studies that were done in Switzerland. In Switzerland, different cantons have different amounts of degree by which you can vote on taxes. And the more, Lars Feld and Bruno Frey, two famous public finance economists, looked to see whether compliance, how that was linked, tax compliance was linked to your ability to participate in referendum, where you actually could decide whether you like the goods or not. So this is the idea of voice, the idea that you can express your opinion with respect to taxes. And what they found is that the cantons, in which voter participation, which voters could participate and vote more often, had a lot more compliance. So the idea of voice and fairness, I think, there's a pretty well established body of evidence that that's positively linked to tax compliance. There's also a large body of literature which suggests that if you think others are paying their taxes and you think others are generally complying, that you will comply too. So the notion that if you think there's general fairness in the system, you'll react positively as well. So psychology is actually quite important in the tax compliance. So let me turn to the property tax. We know that the market value property tax scores high, largely because of the great work of Lincoln Institute and others on the grounds of efficiency, equity, decentralization, and transparency. But there's some issues with administration. But public opinion, of course, is not as keen on the property tax. It doesn't score well in opinion polls relative to other taxes. And more in practice, voters have put sharp limits on property taxation. And in many cases, like in California and Florida, have replaced market value taxation with other types of taxation like acquisition value taxation. There's a lot of reasons that people don't like property taxes. The one I offer here, and again, is to be part of the process of thinking about this, is that in many cases there's a perceived lack of procedural justice in the tax system. So think of it this way: you have a community that has to raise a certain amount of money, and that's your revenue target. Your own tax bill then will be your share of the assessed value times the revenue requirement. So if you have a small property and the assessed value is large, that'll determine your property tax bill. Now, many other factors will determine your share of the assessed value. And some will affect your assessment directly, but some will affect the total assessed value in the community. So for example, suppose a mall opens outside your community, which lowers property values within your community, then your share will go up even though nothing's happened to your property per se. Suppose the EPA finds some toxic waste in some lots on your property, same thing happens. If gentrification exists in certain parts of your district, right, that'll affect the values as well. Or the assessor comes in, has a new computer model for property valuation. He runs his model, and all of a sudden your property is valued a lot higher. Well, all these things would increase your tax bill, but there's also very little connection, at least from the individual point of view, between your tax bill calculated this way and your sense of either the worth of your property or the sense of the value of the services you get. There's kind of a disconnect there. And I think that violates a sense of fair process and fair procedure. It's not as if we give people a lot of voice, that is, you can go to an annual meeting, your town hall meeting, and say, I'm going to vote to raise my property tax and my assessment goes up. These things are out of their control. And Nate Anderson has done a lot of empirical work showing that these kind of random variations in valuation are actually quite important. And to the extent that your taxes are volatile, it violates one of Adam Smith's precepts that the certainty of taxation is probably one of the most important things. There's other elements of property taxation that can be explained by an emphasis on process and procedure. Some of you are familiar with the two Supreme Court cases about acquisition value taxation. So in the late 80s, early 90s, in Allegheny, Pennsylvania, what happened, the assessor there was only reassessing properties when they were sold. And it wasn't a law that said they should do that. That was just kind of an ad hoc practice that they were doing at the time. Supreme Court took up the case and said, you know what, this violates equal protection. And they basically said this was unconstitutional. And Allegheny County had to change their assessment practices. Well, then this got people really interested in California. This is how I got involved in the California Prop 13 debate, because people thought that on the basis of this reasoning, it would overturn Prop 13. Because in Prop 13, by law, we were doing exactly the same thing. You only would reassess your property when it was sold. So it went to the Supreme Court, and Supreme Court, Nordlinger versus Hahn. Hahn was the assessor in LA. Nordlinger was Stephanie Nordlinger, a homeowner in LA. The Supreme Court said, no, this is perfectly fine. And the reason they said it was fine is because it wasn't that the outcome was different. It wasn't that there was a different outcome between Pittsburgh and Allegheny County and California. It was because it was the process and procedure were different. In California, people had voted in a law. In Pittsburgh, they hadn't. So it was the emphasis on process versus procedure. And if you think back to a lot of legal cases involving not just taxation, but statutes of limitations, other areas like that, you'll see the emphasis all on process and procedure. And finally, there's some interesting examples which would take me a little too long to go into in detail. But let me just say that when you have voice as a civic participant, that can actually make a difference in how property tax reforms are accepted and practiced. And I'll just give you one example. After the poll tax in Great Britain put in what's called the council tax. And the council tax basically puts your property into different bands. And then they assign a tax payment there. And the bands determine how much your property tax bill relates to others in the bands. And the community as a whole can vote up or down the whole amount of property tax they raise, but the bands in proportion stay fixed. So you only pay, like, for example, if you're at the top, you'll pay 2 times as much as the people at the bottom. And that'll always stay fixed regardless of what your band is. Well, the one problem with England is that after they put this in 1993, they never changed the bands. They never changed the band. So regardless of all the property appreciation, the same band was like £100,000 at that limit. They didn't change it. And obviously that has to change, right, if you're going to have a good system. Well, Wales decided they were going to undertake a revaluation. They would add a new band and they would change the bands, and they would do it on their own. They thought England was going to go along with them, but England never did. So Wales did. Well, how did Wales do it? Because there were going to be winners and losers from this revaluation. Every property would be looked at again. The bands would be changed themselves. And there'd be big winners and big losers. Well, what they did is they had this very elaborate multi-year process of inundating the public with information, encouraging participation, sending out newsletters. And my research assistant and I actually found these mailings that went out to people. And they invited comment, and they actually made changes with respect to the comment. And eventually this was accepted and passed through. Now, it's true that people in Wales were very annoyed when England didn't go along and make its own revaluation, but they accepted it. Now, contrast that, say, with Toronto, where Toronto has been trying to reform their property tax for about 80 years. And in the last 15 years or so, they had some major changes, but it wasn't very accepted by the people. There were protests in downtown Toronto. There were all sorts of non-payments for a while. Part of it because no one could understand what was going on. There was really a lack of a communication. So if you interpret voice broadly in terms of participation and communication, that explains why certain property tax reforms, I think it does, are more accepted than others. So let me turn now to the income taxation. And as I said, expert opinion typically focuses on redistribution. So how high should the top rate be? How much should the top 1% get, and so forth. And that comes basically back from philosophy from John Rawls, that we should design policies that we only allow inequality if it raises the welfare of the least well off. In the economics tradition, James Mirrlees develops this notion of optimal income taxation. And the idea of optimal income taxation is you tax as much as you can, but to redistribute, but the only thing that prevents you is the fact that if you tax too high, people won't work. Well, one of the outcomes of that is that what you should do is you shouldn't have the very top rate too high. You should have the rates lower than that pretty high. The reason is if you make $120,000 and you have a high tax rate between 120 and say 200, then that will affect the incentive for those people to work. But if you tax very highly the amount of income, say between 100 and 60,000, then for the people making 120, it doesn't affect their marginal incentive to work, so you can actually get more money. So it suggests you should have high rates early on and lower rates kind of at the top. And that's the tradition from optimal income taxation, and people write about that all the time. Peter Diamond at MIT and Emmanuel Saez suggest the rate should be like 70% in the US. And that's the approach taken by experts. On the public, though, the public is quite split on the idea of redistribution. When we do give money to the poor, we prefer it to be in the form of direct spending on goods and services like food stamps or housing vouchers. And we even support workfare, making people work, even if it's presumptively inefficient, even if we know that the work, in fact, won't be very productive for people. So how do we understand that? Well, first, here's some data just showing people the idea that the public is split on the idea of redistribution. This is from the Tax Foundation, which is not a big fan of redistribution, but their own surveys show that there's a large group that opposes it, there's a large group that supported it. On balance, there's support for redistribution here. If you drill down and look at some other studies, though, you'll find that people are much more interested in redistributing from the high to the middle class than they are from the high to low income people. And the numbers here are, suggest that that's on average. Now, people do believe in distributing from the high to low income, but there's also a lot of belief from high to middle income people. And even people who are in these surveys presumptively have low incomes, many of them oppose redistribution. And I think the reason for that, primarily, is this notion of equity theory suggests kind of deeply that if you earn the money, somehow it's yours. The philosophers I'll talk about in a minute, Murphy and Nagel, call that everyday libertarianism, the notion that the money you earn is your money. But it's clear that the average person, even lower income people, are not that, if we go back to here, you can see many people, even with low incomes, oppose redistribution. And it's not just at the high income area. And there's a lot of self-interest when you ask people about attitudes toward redistribution. So as I said, equity and exchange theory suggests natural limits to redistribution. The fairness of redistribution is tempted by the sense of earnings and the entitlements to what you earned. Just in those experiments, if you earned the $10 before you played the experiment, you were more likely to keep it than you were to give it away. Back in the 60s, Bill Clinton says we're going to change welfare as we know it, right? And introduce workfare, very strong work requirements. And that's popular because the idea is that people at least are working, they're putting inputs in, and that's why they're getting something back from the government. We did some empirical work, some of my co-authors and I, and showed that people were quite sensitive if redistribution went to people very close to them. So if you were making $50,000, you were not very happy about redistribution being close to $40,000 because you were worried that those people weren't working as much as you were. The sense of fairness and equity, the sense of equity and the fact that you're working and they're not, is actually quite important. Mickey Kaus, who's, I guess, had probably calls himself a liberal, but by these comments views as more conservative, commented back in the 90s. He said the American welfare state is not really a welfare state in the American sense of welfare at all. Most government programs have been work tested since their inception. Think of Social Security, right? Social Security, you really have to have covered earnings before you work. Workfare under Clinton, and so forth. There are obviously welfare programs, but AFDC was replaced by TANF, which had high work requirements. And so here, that's a notion of equity theory, I think, and the notion that people need to put something into the system in order to get something out. I think it affects the way we think about redistribution. It also suggests that things like ordeals, where you actually make people work in jobs that maybe aren't that great, might have some useful function. An ordeal mechanism helps separate the needy from the not needy. In general, if you offer money to people, some people who are needy will get it, and some people who aren't needy will get it. But if you require people to take an ordeal, stand in line for a long period of time, and so forth, then the people who don't need it will say, well, I'm not going to do that. Only the needy people will do that. So ordeals, in fact, separate that. And the idea of having workfare, perhaps as an onerous ordeal, is something that actually can be quite efficient. It's also the case that, and this is why one of my discussants at one of the NTA sessions hated this, but that stigma, some types of stigma, actually can be very useful in terms of this ordeal sense. Suppose, for example, that people have a stigma against the non-working, perceived non-needy. That is, the people who don't need the money but are just collecting welfare benefits or government support benefits. That stigma may be a way to prevent people from taking that because they'll feel the stigma. The government doesn't know, for example, if you're moonlighting when they give out money or not, but your neighbors might know if you're moonlighting. And so stigma against the moonlighting neighbor who also is collecting some social support would be a way of making actually the system more efficient. So, I mean, generally we don't want people to stigmatize people who have no control of themselves, but some healthy stigma, in fact, could actually make the system work a little more efficiently. Let me turn now to estate and gift taxation. And there are kind of two basic puzzles with estate and gift taxation. First of all, a vast majority of people would not pay the estate and gift tax at current levels, and yet there's strong opposition to, even among those people who clearly would never pay it. And now, and the other puzzle is proponents of limiting the estate and gift tax almost always fall very heavily into a total repeal group. And they would not, and then they don't even support higher exemption levels. They just simply want to get rid of that. Now, why is that true? Well, Michael Gratz and Ian Shapiro have a fascinating book about the estate tax. And what they suggest is that in the debate about the estate tax, there's two different themes that are operating. One is what they call the justice theme, which focuses on using the estate tax to take away money from the very rich and redistribute to the poor, and the focus is on redistribution. But the other aspect, the other kind of moral aspect of the estate tax is what they call the virtue claim, and that they think that it's very important for institutions, particularly tax institutions, not to damage the entrepreneurial spirit and not to hurt wealth accumulation. And so people who emphasize that are in the virtue camp, people who worry about redistribution are in the justice camps. They also note that these emotional debates are not easily influenced by objective facts. And they also pointed out there's a very diverse coalition of repeal opponents, some of who are very rich, maybe behind the scenes were pushing the opponents or funding them, but many people who are very small business people who would never be subject to the tax still were vigorously opposed to it. And offers to compromise with them by increasing exemption levels, even to current levels, did not split the coalition. So how do we explain that? Well, Gratz and Shapiro explain it with this. They say people just don't know anything about the system and they're over-optimistic about their chances of being rich. And that's certainly possibly true. People don't have a perfect idea about things. But I suggest that there are two other psychological factors that are kind of operating. One is this notion of system justification theory. Some people might feel that there's a threat being posed by the estate and gift tax. And what's the threat? The threat would be the institution of the family, the idea that you can't provide stuff to your heirs. And the second, there might be a threat to the notion of the American dream of meritocracy and the chance to accumulate a fortune. And if you go back and reinterpret some of Gratz's and Shapiro's long quotes and long historical discussion, you can sort of see how this could fit into that category. The others is moral mandates. People have very strong feelings about the estate and gift tax. Some people think it's outright just wrong to tax people at the time of death. It just seems a terrible thing to do. People have this strong belief that income shouldn't be taxed twice, although tell that to state governments. And also, they also feel that it undermines the American way of entrepreneurship. So I did some experiments. I'll just give you a flavor of some of these. And for these experiments, I'll describe what we did. Instead of using undergraduates, we went online and used something called Amazon Mechanical Turk. Now, it turns out Amazon Mechanical Turk is a device where you can put a survey instrument on the web and people called Turkers go on and answer the questions. And they typically earn 50 cents or so per question. And it gives you a slightly more representative sample than using undergraduates in a psychology laboratory. And so we did this, I did it with an undergraduate student. And so what we did is we first looked at system justification theory. And remember, when there's a threat, people are more likely to support the system, right? The status quo. And so in the threat case, we basically gave them the prompt that the U.S. has experienced significant decline, the debt's getting bigger, there's a war on terror, we have all the buzzwords. China, India, and Brazil are taking over, our political system's dysfunctional. Sounds like the New York Times, right? And then for the non-threat case, we go, well, despite the negative outlook often suggested by national media, we have a bright future, the worst of the recession's over, unemployment's falling. So we expose these people to these kind of two prompts. And then we basically ask, are you in favor of repeal or against repeal of the estate tax? And what we found is it didn't change dramatically their basic core support for the repeal, not appeal, but it made a lot more people uncertain. When they were under threat, it made more people uncertain. So it does suggest, so this was a very suggestive idea, it wasn't a full complete study, but it did suggest that when faced with no sufficient threat, it made them less passionate, less convinced that we should, for example, do any one thing. Also, just for curiosity, it was very interesting, 25% of the people who were for repeal wanted total repeal. That is, we kept giving them very, very high exemption levels. Now, of course, some people, it also revealed they didn't understand the exemption level because we gave them low exemption levels and they thought that was, they didn't like that either. So, now the reasons for opposition, that came out, again, this notion of the double tax was very important. Threats to the family are very important, and about family-owned business. Despite the fact there's very few family-owned businesses that can't these days get around that, nonetheless, it was these factors that seemed to be, in our survey, seemed to be operative. Now, for moral mandates, we also looked at moral mandates. And what we did with moral mandates, the idea there was we tried to get them in an emotional state of mind to see if their views about the estate tax would differ. And so for the control group, we basically have them read the first two sentences here. Currently, the government has a federal estate tax. That is, there's a tax on money people leave when they pass away. About as neutral a statement as you can get. Then for the experimental group, we had them read the rest of this paragraph, saying, supporters say only the wealthiest Americans would have to pay it. It provides valuable resources. The richest families have far too much power, and so forth. On the other hand, opponents say it's a death tax. It threatens small business and farmers. And we just tried to trigger emotional responses. And then we asked them, then we exposed them to two different stories, what I call the Paris Hilton story and the family farm story. The family farm story obviously was a story in which the family farm was being broken up because of the estate tax, and poor Jack Williamson, who had was 88, he wasn't able to pass it on, and he's going to have to break up the farm and so forth. And the Paris Hilton story, you can imagine what that is. We called her Calissa Morgan, and she's going to get into Columbia because her father was giving a lot of money there, and so forth. And then we asked people exposed to each of these stories which one of these were more likely to be true or not, right? And then later we asked them whether or not they thought the estate tax was fair. So the emotional story actually didn't influence whether they were more pro or more anti-appeal. For the control group, the pro-repeal participants found the pro-repeals more likely to be true than not, and vice versa. But for the experimental group, the one we made emotional, they found both stories more likely to be true than not. So it's clear they're being swayed by emotion. Right? And then finally, we asked them to rank the fairness of the estate tax on a 1 to 5 scale. And the striking finding was even the people who were initially in the experimental group, a majority of people still thought the estate tax was unfair, even if they were even if, by chance they probably would have been in the anti-repeal group. And so you could see in the experimental group, we had very few people think it was fair and a lot more people think it was unfair compared to the control group. So it does suggest that these kind of emotional stories that is associated with the estate and gift tax do seem to make a difference. Okay, so the last topic I'm going to finish up with today is going away from the idea that folk justice can explain different taxes. We talked about how to explain compliance, how it could explain attitudes toward property taxes, property tax revaluations, how it could explain ideas about attitudes toward income and so forth, income and earnings, so forth. But now I want to talk about whether, in fact, thinking about this kind of folk justice will lead to some kind of normative ideas or not. That is, things about what we should do. So people who are trained in philosophy, there's a theory in philosophy called desert theory, which basically says person A deserves either some reward or punishment, B because of some action they took C. And it turns out that equity theory in psychology, where inputs are related to outputs, is very closely related in spirit to equity theory. So in criminal justice context, we don't have any problem applying that, right? A deserves to go to jail because they were driving drunk and they ran over somebody, right? Or A does, So for criminal justice, this works pretty well, but it's much more problematic in economic settings. In particular, the issue is, should you keep what you earn, or should, for example, Michael Jackson, dating me, of course, but should Michael Jackson be able to earn all the money he earned from all the records sold worldwide, and be able to keep all that money? Would you keep what you earn? And so if you think about that issue, there's a deep issue that's discussed in the literature on desert theory about whether desert is a pre-institutional or institutional concept. You can imagine that Michael Jackson, in a world in which there wasn't easy reproduction of records and CDs and so forth, or property rights weren't respected around the world, wouldn't be able to earn all those royalties, right? So the sense that the institutions themselves determine what you can earn, that's a notion that's the institutional notion. So some people say that if the institutions are fair to begin with, then it's okay, then you can get what you earn. But you presuppose the institutions are fair to begin with. Other people say that regardless of the institutions, there's still a sense in which you should get what you earn, regardless of the institutions. So Rawls says, no, desert's only meaningful under a just institution, under a just set of property rights, under just institutions to begin with. Under that framework, then you can get what you want. You can earn what you want. Murphy and Nagel, mentioned before, make a related argument in their book where they talk about everyday libertarianism. They say, look, you have to start with just institutions first. Now that's, you could argue that back and forth, but there's some experimental evidence actually in philosophy. Philosophers have also used this Amazon Turk method and have actually tried to probe these kind of folk attitudes. So here's one of my favorite ones. There's a philosopher named like Sean Nichols. Those of you who like the Teaching Company lectures, he has a fantastic series on free will and determinism. But one of his former students, Freeman, along with Scott, did this experiment, and they basically asked people they asked subjects whether under these two scenarios, people deserve their economic rewards. So for the control group, they said, suppose that some people make more money than others solely because they have genetic advantages. It was a very abstract framing of the problem. And as you might expect, people said, no, they don't deserve the economic rewards in that case. But then they asked them this example. Suppose that Amy and Beth both want to be professional jazz singers. They both practice singing equally hard. Although jazz singing is the greatest natural talent of both Amy and Beth, Beth's vocal range and articulation is naturally better than Amy's because of differences in genetics. Solely as a result of this genetic advantage, Beth's singing is much more impressive. As a result, Beth attracts bigger audiences and hence gets more money than Amy. Should Beth get to keep the money? Well, what do you think people said in this case? In this case, people thought that Beth should keep the money. And it totally reversed, pretty much the opposite percentages in each case. Now, what's going on here? Well, it's an interesting example. And Friedman and Nichols, or philosophers, kind of debate this back and forth in their article. Well, one difference is this is a very abstract setting, right? And this is a very concrete setting. So it seems that in concrete settings, we reward effort even though we know there's kind of genetic advantages. In the abstract setting, we don't. Now, which is philosophically valid, right? Could Rawls get people in the reflective equilibrium to change their view about this? I don't think so. I think this is probably held pretty deeply here. Nichols suggests it's a little bit like language. We have, in language, we have the facility to learn language in the abstract. We learn a concrete language. Maybe we learn morals that way too. Maybe we don't really refine our moral sense until we see concrete situations, that we actually begin to speak morality, if you will, and play with morality. So it's not clear to me, and it's not clear to Nichols, exactly which is the true moral position here. But certainly the evidence shows when you present this to people, they basically think that Beth should get to keep the money. And this is pretty clearly pre-institutional, right? Because genetics is much more basic than just property rights. Okay. Now, as I was reading this, I discovered that Greg Mankiw, also down the street, had also written a paper about just deserts theory. And he was motivated at the time by thinking about Joe the plumber from the 2 elections ago, I guess, right? 2 elections ago. And Mankiw, remember Joe the plumber said we should, Obama said it's okay to spread the wealth around. Joe the plumber disagreed. Mankiw was trying to understand Joe the plumber's ideas, but saying, well, people deserve their just deserts. That is, they earn the money, they should keep it. Although Mankiw himself recognized some circumstances where deserts might not be fully just. Mankiw went on to argue that he thought that there's a lot of truth to this idea, that compared to the optimal tax idea in economics, that this actually fit better. One example of his is that suppose if you actually can measure, there's actually a correlation between these people's height and how much they earn. So would it be fair to have a line on your IRS 1040 about putting your height and having a higher tax rate? According to optimal tax theory, the answer is yes, you should do that. And Mayhew said people wouldn't like that. Maybe that's because people want to keep their dessert. So Mayhew then said, well, what taxes might be consistent with this dessert-based idea? And he came up with taxes that really didn't deal with dessert versus non-dessert, but he thought were consistent with dessert and potentially progressive. So pollution taxes, which like all economists love, and so it's not clear how they fall. But public goods, it could be that the richer people, want more public goods or want to pay more for public goods. Also, if you view poverty as a public good, obviously the richer people want to contribute to that. So I was thinking about this, and I said, well, it's true that if you take this notion of dessert seriously, even Mayhew suggested in his article there were circumstances where, like, your cronies on your corporate board give you extra money, or you cheated people or so forth. You wouldn't necessarily want to let people keep that money. So suppose you make a distinction between deserving and undeserving. And so I played around with that, and the principle would be that if you have a true windfall, then that should be taxed because that's not something you deserve. In practice, though, it's harder to distinguish windfalls from effort. One of my favorite quotes I came across as I was working on this was from Gary Player. Turns out it goes way, way back besides that. The harder you work, the luckier you get. And if you think about that, right? You think about that. When you work hard, you put yourself in a position to take advantage of luck. And so it's very hard to separate out what the windfall is from what your effort is. And that, if you think about, once you start thinking about this quote, I have a hard time not thinking about it because it suggests that your effort is intrinsically tied into your luck, and it's very hard to separate it. Jim Hines, writing about the estate tax, talked about why we don't tax the wealthy at 100% rates. One is it's difficult to do so, but then he goes on to say it just violates our sense of fairness. Just like it violates our sense of fairness just like the experiments where if you have a $10, you'll still give it to somebody else, at least a piece of it. Okay. But what type of taxes might work? Well, one idea I had was that a progressive consumption tax, where you basically have an income tax but you exclude your savings from it. But then if you get a big windfall and you consume that windfall, you'll pay taxes on that. So it's like a conventional IRA, not like a Roth IRA. So if you have a conventional IRA, if you have in the IRA and your IRA gains a lot of money, when you cash your IRA out, you'll pay taxes on that. So the government shares, in that case, in any windfall gain, and so the government would tax some windfalls there. And the other aspect of it is that consumption itself is psychologically more distant from work effort, so it's less likely to violate people's sense of equity. And this is some work I'm actually doing right now. I'm actually having people get online looking at how they view different types of taxes, consumption taxes versus income taxes, with the idea that if a consumption tax is one step removed from earning income, it may be more psychologically palatable to people. Inheritance taxes versus estate and gift taxes are sort of the same idea. An inheritance tax might seem like a windfall to you, where an estate tax seems to tax your work directly. An inheritance tax is maybe one step removed, has psychological distance. So I throw these ideas out, and in the book I discuss a few other possibilities. But I do have one caution. Those of you who are familiar with the doctrine of comparable worth that's used in city governments know that that's based on a notion of desert. There's people who earned an MA or earned a certain degree and put a certain amount of time in school deserve certain wages, and many city governments and state governments do that. As an economist, that kind of bothers me as a system of compensation, and yet it is consistent with some desert. So you have to be careful how you use these concepts of desert. So let me just conclude with a few points here, and I'll be glad to take your questions. So I hope I convinced you that, at least in some aspects, a deeper understanding of folk justice has a couple of different roles in thinking about tax policy. First, it can help explain some existing outcomes and our own institutional structures, why we like workfare, why Clinton really resonated when Clinton says we'll end welfare as we know it, why we have workfare, why there's kind of resistance to too much redistribution, why people pay taxes, why certain tax reforms go over easily than others. So there's a lot of different areas where, as a matter of simply positive economics, these psychological foundations of folk justice actually have a lot of explanatory power. The second, it can provide a reality check for politics. So I'll give you an example. Joan mentioned that I was part of a group, and I actually was opposing Governor Jindal's plan to repeal the state income tax in Louisiana. Well, as part of his original plan, he was repealing the state income tax, but he was increasing the sales tax, the state sales tax, and also extending the tax of services. And then he was immediately hit by people saying that, well, this is going to, obviously transfer the distribution of taxes to the poor, which is certainly true. And so the way he responded to that, he says, well, we'll develop these kind of new welfare programs. And he actually came up with 2 welfare programs. One for people who were, near the poverty line, where there'd be a big cash grant every year going out. And the other, believe it or not, for retirees. And the reason for retirees, federal retirees and state retirees, the reason is under current Louisiana tax law, income tax law, retirees don't pay any tax on that. So to compensate them for the extra sales tax, he was going to have a new welfare program on top of that. So my view on that, as I thought about that, I said, look, in the long run, he's never, ever going to be able to sustain a pure cash transfer system to people, and make it stay in the long run, because it's not tied to people's work or reward. And that was an idea that I just thought of in conjunction with it's not in the book, but it came in conjunction with the proposal. Then there's another view that's very popular in economics these days about tax salience. Certain people notice certain taxes more than other taxes, and economists have learned that. And so the issue is, well, should the government exploit that information or not? So for example, sales taxes where you pay at the register aren't noticed as much as if the price is put into the product on the shelf. And there's been some experiments, again, by another Harvard professor, Raj Chetty, who demonstrated that. But what should you do with that? Well, some people have said, well, maybe we should, maybe we should use that information to redistribute or do something with that. And my view was that that really runs afoul of the notion of voice, because you really are taking away people's understanding. You're kind of tricking people, and over the long haul, that's not going to be good tax policy. You can't ignore the means by which you do things. It'll eventually be viewed as bad process. And then finally, third, it could highlight key areas that we need to pay more attention to. For example, something like stigma, we might want to rethink its role. And finally, we might want to rethink our export theories in ways that respect certain aspects of folk justice. And that might lead to different types of taxation, consumption taxation, or other types of taxation that respect people's beliefs about what's fair, but at the same time accomplish ends what we think is good. So with that, I'll just stop and be glad to take any of your questions.
Your concept of voice, I think, is really important, and in my mind, it connects to, particularly on the federal level, with the whole issue of campaign finance, lobbying, special interests, and so forth. And I think that it seems to me that that's a huge issue with respect to perceptions of federal tax schemes.
So now I can imagine that could cut different ways. So I can imagine the people who are wanting to campaign might say, well, we need to have our ability to contribute. And on the other side, people were saying, well, we don't know who's contributing. I know which side were you advocating? Which side were you? But on both sides, the notion of participation is important. So George Will, who writes about campaign finance reform all the time, basically says you can never control this. People want to participate. And he always says we spend less on campaign finances in the presidential campaign than we do on Twinkies in a given year, right? So there is this notion that people do have the urge to participate. On the other hand, you want to make sure it's kind of transparent about who's participating. And that's the trick. How do you respect privacy and things like that?
But I think this kind of comes back to the perception is reality. The guy in the street that is looking at these various tax proposals has this idea in the back of his head that it's all a result of something that's going on out of sight, and certainly the transparency is a step toward dealing with that. But still, I think the guy in the street feels that he has relatively little input into the fairness aspects of federal taxation.
And it is hard to think about systems in which in a large mass society like ours, it is hard to think about systems where you can get that voice to operate. We all can think of the New England town meeting where we vote on our own property tax shares and so forth. But in reality, in more complex situations, it's really hard to bring that into practice. Question?
Yeah, I think the large problem with the property tax is the way it's collected. I mean, it's taken from money that people already have and feel is theirs, whereas the income tax, if it's taken out of a paycheck, in a way you don't see it. And so I think you need to make a distinction between different types of property. I don't think all property is created equal. You know, and so therefore I don't think it can be treated equally. You talked about the popularity of pollution taxes. With economists, there's a reason why what people are now calling Pigovian taxes are very popular. That's kind of a commons in nature. And you know, I don't hear you talking about monopolies when you're talking about folk justice. And so I think people understand the fairness of charging people for pollution that impacts on everybody. That's logically fair. So many of these other things, you know, are buzzwords like death taxes. There's been a lot of lobbying going on to influence the way people view different taxes. And so some of your experiments bother me because I think they play in to sort of these terms that we've been convinced that's reality, and I'm not sure that it is. The property tax to me is a hated tax because of the way it's collected. I like the property tax in Massachusetts much better than the one in Pennsylvania because here I get to pay it 4 times a year. In Pennsylvania it was twice, and the one in the fall was huge. But you know, an income tax, you don't see it. It's like you're talking about taxing items on the shelf. And I think that's a very large reason why the property tax is hated.
Right. So
and if that could be changed somehow, I think the property tax is a pretty good tax.
Well, I'm actually a fan of property tax as well. The notion of, I mean, part of what, with respect to the property tax, part of the issue with the property tax, some people have written, in fact, about the salience aspect, the fact that it's collected multiple times. There's actually been a few studies about whether if the property tax is collected as part of the escrow, right? Then there's some evidence, there's some mild evidence, not really strong evidence, that there's a little bit less resistance and fewer property tax limits than if it's collected on a lump sum. On the other hand, you know, if you go back to certain public finance theorists, one of the reasons they like the property tax is because you see it, right? It's not disguised, and so forth. This notion of a connection, though, with a connection of what you're doing with the outcome is consistent with a number of different aspects of for example, on the procedural justice, it's a sense that if you're paying for something and you're getting the goods in return, that increases support for the system and so forth. Many of these ideas from the folk justice conflict with each other and go in different directions. So there are certain ideas that might come about from procedural justice, which might go in the other direction. I'm trying to step back. I'm not trying to draw too many normative conclusions, except in a few different areas. But I do think it's important for us to know why the death tax opponents, because there was, before the death tax was invented as a term, there was still that large opposition to estate and gift taxes. And I think we have to kind of understand what's going on. I think also this notion of consumption being more distant from work, I think is a very persuasive idea too. So we have to be able to step back and see what's driving that. It is true that labels can matter. People manipulate labels. Money plays a role. But I guess I'm arguing that they're playing on something that's already there, and we have to understand that to see why, in fact, they're effective. Great.
I have 2 questions. First one's about meritocracy, where, you know, I made the money, it's mine, but then for the recipient of the inheritance, that flies completely against meritocracy. They had this money, they didn't earn it.
That's right.
And what's your reaction to that? The second question is really about just deserts. I mean, there's a famous saying which is, behind every great fortune there's a great crime.
Yeah.
You know, and the sort of current manifestation of that for me personally is carried interest.
Yeah.
You know, which is just completely outrageous, and it, you know, it just doesn't make any sense to me, and it offends me. I mean, that's something for me. That's the moral mandate thing.
Right.
It's just outrageous. but in that case, you know, this whole just deserts thing disappears.
Right. So I mean, I think even someone like in Mayhew's case, he was saying, well, if we have this idea, there's still cases where, and he listed a few. For example, you're on a corporate board and you get some, outrageous golden parachute. People who got big raises when the government bailed out AIG and they still came away with raises. These are kind of non-deserved outcomes. The inheritance tax is interesting because if you think about it, if there's one heir, right? If you had one heir and you had and it wouldn't really matter whether you tax the estate or tax the heir, but somehow we think that the taxing the estate is more closely tied to your work than it is to the inheritance. And so what I suggest, in fact, is that if we reframe things as inheritance taxes, it'd be much more likely to be accepted than it would if you framed it as an estate tax. Now there are technical difficulties with it's easier to get the money from the people when they die. I'd say easy, and it's easy to. But if you think about it, an inheritance tax, you could make progressive because it depends upon how much you're getting, right? Not what the estate was. So I think you can make an argument based on this, that based on kind of the psychology and a notion of desert, that you can move toward an inheritance tax that would be more progressive. Now, I can't resolve the issue about whether capitalism is fair or whether property rights is fair and so forth. What I do want to suggest is, though, that there are large numbers of people in the economy who vote and people in Congress who share, if you will, the naive libertarian view or the just desert view, and we have to come to grips with that when we think about how to reform tax policy. Yes?
As I'm listening for the first time to you discuss the concept of folk justice in relation to tax policy, I'm reminded of personal experience with grassroots statewide ballot initiatives related to tax policy. And I know the experts and the textbooks more or less dismiss that as any kind of justification of tax policy, but it strikes me that folk justice, it almost translates into that kind of an initiative in a way. Mm-hmm. And I'm wondering if in your thoughts or your work you've given any specific attention to the role of ballot initiatives in fiscal tax policy.
I haven't in this project, but I have thought about it. In early 90s, I was part of a group. It was during the the earlier California recession. This is the 90s recession. The University of California was in bad shape, and there had been a scandal, a compensation scandal at the University of California, and so things were bad in California, bad for the university. And so the new president came to the university, and he put together this coalition called the California Business Higher Education Forum, where he brought together people from the chancellors and the CEOs of the major corporations to try to think about good government initiatives. So they had a tax reform group, which I was part of. I tried to sell them on reforming Prop 13, and that didn't go very well. But one of the people who was part of our group was a pollster, and he would come to our groups and he would say, you economists, you guys talk about these ideas of earnings and work and so forth. The average person thinks of this very differently. So when I run an initiative, it polls very differently based on how we kind of use the terms. So I think people in the field, and pollsters and people advising campaigns and so forth, sort of know that certain ideas resonate and certain ideas don't. And I think that's very important. I think that's probably an underexplored area in terms of what can work and what doesn't. Yeah.
Can you talk about how these attitudes might be expressed towards, one, the land value tax, and two, the internet sales tax that we've been reading about recently?
Right. Well, that's a challenging question. I mean, the land value question. I mean, if you could, in good Georgian tradition, make the land value tax look like a windfall, right? Taxing a windfall, then you could probably get away with it. But the question is how you would actually get to that point or not. Because after all, the people who just bought the property last year don't feel that way. They feel that they paid fair price for it. So that's the kind of the difficulty there. You can imagine a situation going forward into a new country or exploring a new region or opening up the moon, then that might work, and you could think of it in terms of selling it that way. The internet, I guess this marketplace fairness has some legs right now. We'll see how far it goes. I think you have claims on both sides. I do think that the small business, the feeling that they're being threatened and so forth, by this. And I think that the eBay people who are saying we're actually protecting small businesses, I'm not sure that's what they're trying to do. The eBay has come out saying, well, all these small businesses who are selling more than $1 million are being kind of threatened. So I'm not sure how it ties exactly to my concepts, but there is this kind of threat to the way of life, threat to Main Street. I think that's what's kind of going on there as well. Yes.
There's folk wisdom that you'd rather be lucky than good.
Right.
And how does that play into just desserts when unequal outcomes come about through luck versus?
Well, that brings me back to my Gary Player, my Gary Player situation. An example would be, think of the situation of Watson and Crick. Now, if you remember the book, The Double Helix, there was a really interesting story because there was a woman in the laboratory where they were working in Cambridge who had done all the painstaking work, isolating all the molecules and whatever they were. And then Watson and Crick came there and they said, boom, I see it, right? And they walk away and get famous and her name just kind of fades away. That's happens all the time. On the other hand, they happen to be in the right place, they happen to work, they happen to learn, they happen to take advantage of the opportunities there. If they hadn't taken advantage of the opportunities, you wouldn't have had kind of the discovery there. So you put yourself in the position.
Desserts in that case, do they think that it's?
Well, no, that cuts the other way. On the other hand, if you practice really hard and start a lot of businesses, one of them takes off. I tried writing a couple different principles or different textbooks, and a couple of them didn't do very well, and I finally got lucky on one of them. Well, I was, and is that?
But then it's not ceteris paribus because someone's working harder than another person.
Well,
so you take your example of the singers.
Yeah.
And they both worked equally as hard.
Right.
And one just happened to be in the right place at the right time.
Okay.
Then how's that viewed?
Well, I'll ask you. I mean, do you agree with the assessment of the majority in that case or not? Do you think Amy Beth should have gotten more than Amy or not?
I have no problem with that.
You have no problem with that. Why? Because she worked harder?
No, they equally
both
worked. One was better than the other, so they were.
Okay, even though their advantages were, so that's
a genetics thing. Everything's the same except for the genetics.
Right. So that's in favor of just desert.
Yeah, but I'm wondering how is lucky treated now versus.
Well, that is luck. That is luck. Genetics is luck.
No, it's not perceived. I mean, it is in a way, but it's different than winning the lottery, for example.
Oh, it is. It is different, but genetics.
But how about inheritance? Inheritance versus an estate tax. Inheritance could be viewed as luck. You just happen to be lucky to be born into a rich family, and you get the inheritance.
I agree. I agree with that. But let me go back to the genetics. People talk about the genetic lottery. Right? That's a phrase that people use. In fact, we're all talking about that. Right? The genetic lottery. So, and in fact, there's a whole long debate in about what's called luck egalitarians. There's a group in philosophy called luck egalitarians, which tries to answer the following question: can we reward people just for their effort, but isolate the luck part, right? And first of all, can it be done? And if it can be done, and this was a response to Rawls, that Rawls said everything, even your character, even your ability to work hard, was determined by your parents and by your genetics and so forth. So the luck egalitarian said, well, that's too strong. Let's allow people to get rewarded for their effort, but at the same time, take away anything that was pure luck. And the problem I have with that is the Gary Player problem. It's just kind of hard to make that kind of calculation like that. I think public sentiment, from the Beth and Amy experiment, suggests that people are willing to tolerate a lot of luck as long as there's some effort there. And so in the case of inheritance, in the case of pure inheritance, where someone didn't do anything, I think that kind of goes, in my view, kind of goes over the line, and goes over the line probably in public opinion. But these are very difficult issues, and these are, and people have struggled with these, and for a long time. I don't pretend the answer. I'm just trying to give you the contours, if you will, public opinion here.
There's a slightly different version of the Gary Player line, which is chance favors the prepared mind.
Oh, okay.
Which might be more of a one.
Right.
There might be a different way, perhaps, of looking at the Beth and Amy thing, assuming that the summary is the same way the whole detail plays out. I mean, reacting personally, thinking about the effort of the one providing that, in that case, a performance, hitting a little closer to home is, am I willing, as the consumer, to pay more for a higher quality product, in this case, a better performance.
Right.
So I'm going to react personally to the right-hand description because I'm going to go, hey, I'd pay a lot more for a ticket to see Beth than I would Amy. And only secondarily, how much effort did it take, or should she keep the money? Whereas the left column doesn't get into that
Well,
at all.
the left column is this oops. Let's see if I can go back. Well, anyway, the left column, the abstract column, basically said, somebody earns more because they have other advantages. Presumably, if you ask the next question, why are they earning more? Because someone's willing to pay more for their services or for their product. But I think the difference here, and Sean Nichols and Friedman argue, the difference here is really the notion of when we think about this in the concrete versus the abstract. And I think that's a hard issue because we may come to different judgments. And we sit back and we're in our Harvard office and our NYU office thinking about fairness. We think about it one way, but when we're out seeing people actually making decisions, seeing consumers respond, seeing the effort that's being made, we think about it in a slightly different way. But you're right. I mean, the reason Beth is earning more money is because people are valuing that. But that's also true in the other case. Yeah.
Two cases. One, just reinforcing your idea of the importance of process. I don't know if you know the case of Bogota, where a mayor in his campaign, he said, if you vote on me, I'm going to raise taxes. And he explicitly voted on that agenda, and he actually won. And then when he tried to raise taxes, the city council opposed. They said, well, okay, citizens, taxpayers, you can pay 10% more of your property tax voluntarily. And 65,000 people actually did that. I think it's a pretty, but because you could actually, on a list of priorities where the tax would be used, you could order them also.
Okay.
To where you want that tax to go. So that was apparently, this is completely unique, particularly in Latin America. I don't know any other case like that.
Well, that ties in your taxes to where the public goods are going.
Where people would see what's your responsibility as a tax authority.
Right.
The other case is about it's a parallel with the deservedness of genetics or whatever, windfalls from urban redevelopment.
Right. And as part of the political process, you have to sort of engage the people and kind of explain to them at their level, no, not all of this gain which you see as your gain is your gain. On the other hand, you still have the other problem, which is if someone recently bought into that property and paid the high price, right? You don't want to be in this position of taking it away from them because they paid what they thought was fair market value there. But if you're starting, if you're starting up a community, starting up a process, and you're saying, well, from here on, these gains that are going to be partly collective and we have to share them, that'd be the way to go. It's easier when you're starting something new than saying, okay, from now on, we're going to tax everyone in Massachusetts 100% on the value that we assess of their land. That would get a slightly different reaction from that.
A little bit of difficulty to separate the founder's rent, say something from your own capacity to build the right thing in the right place from the general.
Absolutely. Last question.
I think all of these discussions of property tax kind of lose sight of the fact that it goes back to the era when property actually represented wealth.
Right.
And nowadays, the problem nowadays, and what you always hear in arguments about property tax levels, is that people are being taxed out of their homes. And that goes to the issue, the fact that the taxation is totally unrelated to the resources that people have to pay it with. And it's that disconnect that's the problem.
Yeah.
And that makes, in my mind, an income tax a much better source of revenue across the board.
Well, as I say in my book and in the paper, there's a lot of candidates for why people's attitudes towards taxation. Some of them are salient based, like the woman before. Some of them are kind of wealth versus income based, and so forth. But I just thought I'd add this one to the mix. Okay.
Well, we don't want to cut off this discussion. I know there's more and more questions, but we've reached the end of our formal time, and some people have to leave, so it might be good to take a break. I know that obviously, Steve, by some combination of natural endowment and hard work, is a great teacher, and he will not leave
And
until
luck.
all the questions are
That's not
answered. So while we're still together,